Should you be reevaluating your portfolio? To discuss all of this and much more, we've got Matt Powers, who is the Powers Advisory Group managing partner here. Matt, thanks so much for hopping on this morning with us as you're considering some of the trades that transpired post-election, as some of the uncertainty has now been removed from the tape, and now a little bit more focus on what has already been kind of telegraphed from the Fed in the cutting cycle that they've entered into. What do you believe is set to transpire from this point forward, and what are some of the top trades that come to mind?
Yeah, good morning. Thanks for having me on. So yesterday's rally, let's hit that first. We saw the Trump everything rally, you could call it, even though the market didn't exactly show this with real estate, utilities, and staples down. But there's a pro-growth, pro-deregulation mood among investors. And I mean, expectation for more tax cuts. We look at it as a relief rally, meaning investors were simply glad we got results regardless of outcome instead of waiting for days or maybe even weeks. And once euphoria settles from all this, and with the election over, there's quote unquote new uncertainty. So a lot of changes are on the table with the Trump victory, and we've seen this time and time again that the market doesn't like uncertainty. So we see really a raised level of volatility in the near term here.
What does that choppiness look like, and what are the sectors that you think could be most impacted?
You know, it's a couple things there. So the Fed rate cut obviously is here in a couple hours, hopefully a rate cut, but it'd be a more significant headline, but not quite as much because of the election and the consensus that we're going to see that. But so sectors, we like the possibility of the deregulation of banks, and it should spark the financial sector, should benefit both large banks and regionals. Oil and gas will likely benefit. Energy stocks rose quite a bit yesterday, but on expectations of pro-industry policies, clean energy is probably going to continue to suffer in that area. In tech, there's always tech out there.
You know, as you think about the headlines and what they're talking about deregulation, how could that play out within the equities market? And how would you evaluate the equities market even versus some of the bond reaction that we've seen recently as well?
Yeah, so this is kind of left turn here, but over the past, if we're going to the election, some deregulation. Regardless of that, this is interesting. Over the last 25 elections, 1-year returns were positive 10 out of 13 times after a Democrat win, and 9 out of 12 times after Republican. And over 4 years, both parties mostly saw gains. So kind of cutting through that noise a little bit, some of the deregulation in the markets, we like it. One thing on the tech end that is a concern is the tariffs. So that is potentially a negative impact, and it could affect the profitability of hardware and semi companies. So China tariffs specifically.
And so with that in mind, for investors that are trying to get ahead of any additional tariff type of impact, how could they create a perhaps barbell approach or even just a hedge against what those potential tariffs might look like?
Yeah, going back to tech, it's Trump supports reducing regulations, in particular AI is the spot. So cloud could definitely benefit from cloud service providers could benefit. So we recommend, if we're looking at companies, maybe staying away from Apple temporarily, but Amazon, Google, even Microsoft within that Mag 7 block of companies. Financials, another area, just had one of their best days in 2 years. The XLF, kind of a broad-based approach, is an ETF that we like, and it's got exposure to financials, and top holdings are primarily large banks, credit cards. The number one holding in there is Berkshire Hathaway.
Just lastly, while we have you here, Matt, it was interesting, and it was pointed out with one of our conversations this morning from a strategist over at Bloomberg who was talking about how healthcare reacted differently post 2016 than it did here in 2024. And in both instances, a Trump win for the White House, but a different reaction as opposed to 2016 because of how he's talked about kind of what they would do and what he would prioritize or deprioritize within healthcare as well. Where are your kind of anticipations within that sector going forward from here? And why do you think there was that difference in reaction?
We've always liked healthcare. We have all year, and it's not just pharma. It's, from the beginning of the year, one company we liked, and it really hasn't kept up, is Medtronic, but, and that's a medical equipment company. So they had a huge day yesterday, healthcare across the board. We saw that, and, again, kind of shocking, kind of a surprise. especially when you see other sectors that are kind of traditionally defensive, maybe not follow suit. So, looking forward, I think clearly healthcare, if you're going to be sector allocated, is an area you need to look in. We're a dividend growth firm. That's kind of our focus. And traditionally, a lot of those companies are dividend growers. So, there's a lot of them that we do like.
All right, Matt, thanks so much for taking the time here with us today. Matt Powers,
Yeah,
Powers Advisory Group Managing Partner. Appreciate it.
appreciate it. Thank you.